Imagine waking up tomorrow, stepping outside, and your car is just gone. Not stolen, not towed, repoed. That sinking feeling. Over 3 million Americans could face it this year. This isn't just about overspending. It's a crisis at the heart of the American economy, and it could trigger the next recession. Car payments now rival rent, and people are trapped in loans they can't afford. We're diving into how we got here, why no one's talking about it, and what happens when millions of cars flood the market. This is about survival, and it's going to affect all of us. How did cars get so expensive? The pandemic wrecked supply chains, new cars vanished, and used car prices skyrocketed. Dealers slapped on huge markups, and desperate buyers took out massive loans, sometimes for 7, 8, even 9 years. Americans now owe $1.6 trillion in auto debt, more than the GDP of most countries. Car payments of $800, $1,000, even $2,500 a month became normal. The system pushed people into debt, and now the cracks are everywhere. What was sold as a dream car became a financial trap. Forget Wall Street. Look at the spike in people missing car payments. Delinquencies are soaring, especially among those with lower credit scores. Banks handed out risky loans with sky-high interest, and now defaults are piling up. For millions, losing a car means losing a job, independence, and stability. One repo can start a downward spiral. Job loss, missed rent, financial ruin. This isn't just numbers, it's a slow-motion tragedy for families everywhere. The real recession signal is parked in driveways across America. Repo companies are busier than ever. Some say a tidal wave is coming. Up to 3 million cars could be repossessed in the next year. Every car represents a family pushed past their limit. For repo companies, it's a gold rush. For everyone else, it's disaster. The scale is staggering, and it's happening right now. What happens when millions of repossessed cars hit the market? Prices crash hard. Used cars have propped up risky loans, but when values drop 20–40%, lenders and dealers face huge losses. A car repossessed for $25,000 might now sell for $15,000. Multiply that by millions. Billions in losses will hit banks and dealerships. It's déjà vu from the 2008 housing crash, but with cars. Consumer confidence tanks, buyers wait, and the cycle gets worse. The auto market could grind to a halt. Inflation and rising interest rates are making things worse. Groceries, gas, and rent cost more, so car payments are crushing budgets. The Fed's rate hikes mean new loans come with brutal interest, sometimes 15% or more. People are forced into predatory loans just to get to work. This isn't about luxury, it's about survival. The pressure is building, and the system can't take much more. It's a disaster recipe simmering for years. When millions worry about losing their cars, they stop spending, hurting the whole economy. The auto industry is massive factories, dealerships, mechanics, lenders, all at risk. Job losses ripple out, banks tighten lending, and businesses struggle. It's the same domino effect we saw in 2008. The auto market's collapse could trigger a full-blown recession. One sector's crisis can bring down the whole system. When the bubble pops, chaos follows. Used car prices will crash, great for buyers, devastating for lenders and dealers. Financial institutions could need bailouts, and iconic dealerships may vanish. The shockwaves will reshape how Americans buy and finance cars. Maybe it sparks a push for public transit or new ownership models, or maybe, after the dust settles, the cycle starts again. The next year will be a wild ride. Brace yourself. These repossessions aren't just numbers, they're families, workers, and students losing their lifelines. The human cost is immense, and it's about more than money. This crisis exposes a system where debt is the only option and wages can't keep up. The auto loan meltdown is just the tip of a deeper problem. What happens next depends on the choices we all make. Banks, policymakers, and consumers. Drop your thoughts in the comments, like and subscribe, and stay prepared for what's coming.